QQQ, or the Qs, is the tracking stock for the NAS 100 or NDX index. This embodies most of the leading growth stocks. In this video, I'm going to show you how to anticipate where the generals are leading. It's important to know this because where the generals go, the troops usually follow. To do this, to know where the QQQ is headed, I'm going to show you how to determine the line of most resistance. Many traders are familiar with legendary trader Jesse Livermore's line of least resistance. Livermore described this as the pivot point, as the line of least resistance. A stock can move very fast once it crosses this threshold. So it's important to know where a stock breaks through this line. In this video, I'm going to show you, though, the line of most resistance and how it relates to the QQQ. So let's take a look here. In my trading, I use something called a live angle to define what the line of most resistance is. Basically, this live angle or the line, what I call the line of most resistance, are the same thing. Here's a live angle. I take a trend line down from prior, this is an hourly QQQ, and I take a trend line from prior highs or coming up from prior lows and extend it out, and this determines what I call the line of most resistance. And you can see here that this ties to lateral support coming off these bottoms, and where they intersect, it's basically a pivot point, and currently this ties to around 166.50, 167 on the Qs. Since the Qs reflect where the generals as a group are going, it's important to have a handle on the position of the QQQ, as the vast majority of stocks are going to move in sync with the index. Drilling down to an hourly QQQ here shows that the line of most resistance is this 169.50 level. At the same time, you can see that the Qs may have traced out. It's trying to put the pieces together here. You can see the how this 166.50 level sets up. You can see that the Qs look like they may have traced out a head and shoulders top formation with the left shoulder, a head, and a right shoulder. Remember that this is a short-term hourly chart. Given the outside down hour, based on the drop into the runoff yesterday, you've got an outside down hour here, which suggests, even though it looks like we're getting a pop-up open in the morning here on Friday, it looks like you can have a third push down to this 169.50 level, which ties to recent support going back to early this week, February 12th, and again here on the 14th, the opening low on the 14th. Often stocks will trace out little triple bottoms or a three-point trend line. What's interesting in this case is that this three-point trend line ties to what may be a neckline of this hourly head and shoulders, and it also ties to this gap up out of this triangle here. So say we pull back to 169.50-ish and find support today going into the long weekend. It wouldn't surprise me if come next week, after 7 to 8 weeks up in a straight line off the December lows, that we break this. A break of a three-point trend line is what I call a rule of four sell signal. To the upside, a break of a three-point declining trend line or flat trend line is a rule of four buy. But if we break this three-point trend line here come Tuesday, early next week, that would project down to this line of most resistance right here. So that's how I put the pieces together. in trying to get a framework or a structure for where the generals, where the cues may be headed, and in so doing, I get a backdrop or tone to the setups I'm looking at on individual momentum stocks. I hope that helped, and if you find this video interesting, please like and be sure to click on the link. That's it for now. Thanks for listening. See you next time.